Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 18th of November 2016 and we're briefly covering the issue that silver demand in 2016 is likely to exceed supply. 2 days ago, Thomson Reuters GFMS published its interim silver market review for the Silver Institute. In summary, it concludes, the silver market is expected to be in an annual physical deficit of 52.2 million ounces in 2016, marking the fourth consecutive year in which the market has realized an annual physical shortfall. Silver prices this year through 11th of November averaged $17.23 an ounce, which was 9.9% higher than in the same period in 2015. And forecasts silver prices are likely to average $17.15 an ounce for the full calendar year, a 9.4% increase over the 2015 average. This means they expect silver prices to fall a little further between now and the end of the year. Total silver supply is forecast to fall 3% to 1,012.4 million ounces in 2016. The decline is expected to be driven by a 1% drop in mine production, a 0.3% fall in scrap supply, and net de-hedging of 20 million ounces. Mine production is forecast to reach 887.4 million ounces this year, which is almost 6 million ounces lower than 2015, but is still the second highest year of production on record. Silver bullion, coin and bar sales are expected to contract 24% to 222 million ounces this year, its lowest level since 2012. Bullion silver coins are forecast to reach 122.7 million ounces, which is 7.9% below last year's record of 133.2 million ounces. Physical bar demand is expected to contract by 38% this year to 99.3 million ounces, driven by a lackluster Chinese economy and weak consumer sentiment in North America. Demand in Europe, on the other hand, should improve by 14%, reaching 14.5 million ounces this year on the back of Brexit fears and a rising silver price. Physical bar and coin demand should account for 21% of physical demand in 2016, down from 25% in 2015. Total industrial demand for silver is forecast to decline by 1% to 585.1 million ounces, accounting for 55% of physical demand. Jewellery fabrication is forecast to drop 8% to 208.5 million ounces. A decline in discretionary spending, thrifting, lower economic growth and a higher silver price have all contributed to the overall decline. Senior GFMS analyst Johann Weber presented the new report at Wednesday night's Silver Institute dinner in New York. He said, quote, "While such deficits do not necessarily influence prices in the near term, multiple years of annual deficits can begin to apply upward pressure to prices in subsequent periods." Unquote. We tend to agree. Even though the gold and silver pumpers would have you believe there is no silver left, above ground stocks, including ETPs and exchange inventories, are estimated to reach 2,640.1 million ounces in 2016, a 15% increase from the previous year, more than enough to make up any shortfall. Having said that, of course, a continuation in deficits will erode this buffer and can only truly be offset by additional mine supply, enabled via higher prices. What this report reveals to us, quite frankly, is that despite there being an overall physical supply-demand deficit of some 52 million ounces, actual physical demand fell in 2016, unless something dramatic happens within the next 7 weeks. So when you hear the pumpers shout, "Silver coins and bars are in record demand," well, not according to these figures. When they say the supply deficit will cause silver prices to rise to the moon, well, not with a deficit of just 52 million ounces, it won't. In fairness, though, there is an expected 71.4 million ounce net inflow into ETP holdings, which are securities which trade on stock exchanges and are backed by physical metal, making it easier to invest with confidence. And a 61.9 million ounce derivatives exchange inventory build, which together have increased the impact of the physical deficit, bringing the net balance to minus 185.5 million ounces, equivalent to approximately 9 weeks of global demand. Whilst these figures suggest to us that the silver market over the long term of some 10 to 30 years is likely to produce significant gains for those who are clever or wise enough to save and store it away now, it will take either a black swan event or paper investor speculation or a currency crash to occur to provide those fantastic gains the pumpers dream of before that long-term haven is reached. In other words, if you buy silver, do so for the long term in mind, or to act as a currency or portfolio hedge. Do not do so in the belief that you are going to become rich overnight. And should such an event occur in the interim, we simply quote that well-renowned 1970s TV series starring the Fonz. Happy days. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.